Hi, guys. Thanks for tuning in to another episode of Nuggets News. We've got a special guest. I can't believe it's been 18 months since he was on. So, welcome back, Tyrone. How have you been?
I'm well, man. Thank you for having me. You've been so busy taking over the crypto world. You made time for little people. So thank you for having me back.
Mate, you're too kind. And your interview was probably one of my favorites. I think it was the most underrated because it only got a few thousand views, but it was one of the best. And I think if you go back and rewatch that, you're probably going to still learn a lot. But today we're going to dive into the difference between Grayscale's product, what NIDIG have brought out, the ETF, all those intricacies, and the big announcement last week that some of the US banks are starting to allow their high net worth clients to get access to these funds, which is that wave of money that we always hear about. I've heard you throw some numbers around, so we're going to dig into all of that as well. But I guess first of all, mate, how have you just been in general? I mean, it must be so busy these days. In 18 months, hasn't crypto come a long way?
Yeah, it's been amazing to see, the space evolve and grow and the infrastructure to finally, we cracked 20,000 and that whole thing happened. You had the explosion of, the stable coin market, which was amazing, right? Last year, $1 trillion in volume, incredible DeFi, yams and sushi and everything else. And, now with the NFT stuff and, all of the announcements, which we'll get to, which I think is incredibly massive news. I think it's underrated on the crypto side of things, but it is the biggest news to come out in a really long time when you look at what Morgan Stanley announced. So I think if you look at the last 18 months since we've spoken, for me personally, I can't speak for you. I haven't really been shocked by any of this because if you've been in the space, you've seen the picks and shovels and things being built. This is just a manifestation of all the hard work that has been going into the space when it was crypto winter. So I was kind of like, all right, we broke 20,000. I get it. We were supposed to, right?
Yes.
Like Microsoft makes a decentralized ID announcement about they're leaving Ethereum to build their decentralized ID on the Bitcoin blockchain. Not a peep. Like it wasn't a big deal. Yeah. So I think that was 18. And then you start to see all these different announcements and it was nothing. Like it was just, so when we broke 20,000, I'm like, all right, we should be higher, right? Mm-hmm. We broke 30, we should be higher. We broke 40, we should be higher, right? Based on, again, simply what is coming to the fore, not all the carnival barking and grandstanding that goes on, simply because this is a real space that is evolving and the infrastructure, transfer agents, custodians, prime brokerage, all the stuff that make it a real, even some regulatory stuff, right? Even those things that make it real are really happening. So yeah, it's been an incredible time, man.
I still think that Bitcoin as a network, as a computer layer, is the most underrated, not spoken about feature. Like you said, people just don't know that Microsoft is building that digital identity. And a lot of other projects, like even Elastos has had some good news recently. People don't realize they're piggybacking off that Bitcoin security layer. Merged mining, some projects are doing as well. But you touched on the fact that you think that announcement last week is bigger than an ETF. I agree, and we're going to get into that. And I think we literally spoke about how it's the same in all these asset classes, and when fads come along like marijuana or tech stocks, the big boys at Mission Control, I joke, they talk things down because they can't make money off it. So they wanted to drive Bitcoin's price down in crypto until they were ready to have all those picks and shovels, and then they can make money. And they don't really even care if it goes up or down. They can make money off their clients. And sure enough, what happens? Jamie Dimon, they all flip. Guess what? They're all talking up crypto, putting out these massive price targets because they can now make money off their clients. And so I think you were probably educating people on Bitcoin, maybe a touch of Ethereum and DeFi 18 months ago. I mean, how much has that conversation changed from people kind of laughing to, yes, this is a new asset class?
I can tell you this, hard market research and data. In 2017, it was all about Bitcoin, right? And everyone was, oh, what is this, right? And it was retail driven, friends, family, just random people reaching out.
Yeah.
This run up, all advisors. Every time DMs, emails, calls, all advisors, CIOs, right? Chief investment officers of registered investment advisors here in the States, all advisors, all asset managers, nonstop. And it's about well, talk to me about how are they getting 28% over there, right? What is this yield stuff, right? They're asking about BlockFi and other things, and they're asking about Bitcoin as well. So it just goes to show in that time frame how much has changed. And as far as the institutions coming in, we haven't even begun to see the institutional money that's going to come in this space. There's too much holding it up. There's 5 trillion with the T of wealth managed money in the US, like that advisors have purview over. Broker dealers, RIAs, banks, the whole 5 trillion. We've maybe a little pinhole. It's not even there yet because there's just so many of them that aren't educated, aren't going to move. They just are waiting. So this time around is totally different. Now, I will say this. You reach mass acceptance before you reach mass adoption. And especially in the wealth management space. I said this a long time ago. Wealth managers were going to be the last in because of all of the due diligence that they have to go through. People underestimate how regulated our space is, heavily regulated. So they're going to literally walk slowly to the kiddie pool.
Yeah.
And then they're going to watch everybody play in the kiddie pool. And then they're going to put their feet in the kiddie pool. Then they're going to stare down at the deep end. And then I'm not going, right? So there's a lot of learning still that has to be done. But we've definitely reached mass acceptance of that space. The mass adoption will come.
Yeah, so that's 5 trillion just for that managed money in the US. If we say people start recommending somewhere between 1% to 5%, we're throwing around this figure of $50 billion to $250 billion. They're probably charging maybe, let's say, 1% on top of that as the fee. So that seed in the Wolf of Wall Street where you keep them on the wheel, they are going to rotate their clients' money. They're going to put forward that data about, risk-adjusted returns and that uncorrelation, and they're going to make a lot of money from changing their clients' portfolios into some allocation of Bitcoin depending on their risk. And what we're seeing is the extremes from MicroStrategy, Elon in the middle there, and then a lot of people talking about that 1% number as well. So is that the kind of thing that you've seen thrown around? Have you heard any whispers of what company's next? People keep hinting at, there's so many more coming. Have you heard anything on the grapevine?
I mean, you hear rumblings of things, and the talk was always, was Fidelity going to throw their hat in the ring with an ETF? And then what do you see? Fidelity files for an ETF, right? But if you look at just some of the things that I've heard earlier in the year, I heard that actually late last year, I heard of the broker dealers, right? Your banks here in the US, right? Using that language, your broker dealers, your Morgan Stanleys, JP Morgans, whatever. There were rumblings that they were doing something. We get into this year, I actually made a prediction at the beginning of the year that by the end of 2021, we would have one of those guys in. Your Merrills, your Morgans, whatever. It took to March, and Morgan Stanley now is making this available to their financial advisors. Astounding on many levels. But pair that with the large position that they had in MicroStrategy that they announced months ago. Pair that with what they were doing, research report that they put out before announcing that they were going to make the funds available. Then look at Citibank, put out a report. Bank of America, put out a report. JP Morgan, put out a report. Goldman Sachs puts out a report, does a podcast, says they're opening up their trading desk again. As you said, the financialization of Bitcoin is here. It's here. They see a way to make money from it. Clients are demanding it. The ultra high net worth, the high net worth. There's only so many times they're going to see Paul Tudor Jones go on CNBC and talk about this and go, best performing asset the last 10 years, and you can't get access? What is happening here?
Yeah.
Right. And that is what you're seeing. So astounding news, but there's rumblings of, some other stuff. And again, I can't confirm or deny, but I think there's some news coming that people are going to be stunned. But what's left? Mass Mutual. Who do you want? Yeah. Right. The Bank of New York Mellon is the oldest bank in the US. Like, who else do you want?
Yeah.
It's on corporate balance sheets. What else are you looking for, right? Charles Schwab says that they're looking into getting into it. Who else are you waiting? Ray Dalio. It was two people I was waiting on. Ray Dalio and Howard Marks. Howard Marks is my favorite investor. Those two now publicly. What are we waiting for? Like, if you don't, and again, I've never been you need to invest in it. I've never been that guy. I'm still not. If you don't like it, that's your business. But at least be educated and be able to articulate why you don't.
Yes. And
then if you're for it, have an educated reason why you are as well. But if you just are dismissing it now, you're a hater. You're just a hater. This isn't going away. You should get very comfortable. The seat is hot. Just sit in it and enjoy it because it's not going anywhere. And your clients own it and they own it away from you, right? And they're having a great experience away from you. And this is just what it is. And I think, those in our space are coming too now. And it's just a lot of pent up demand that some folks are still even trying to downplay, but they can't. It's here.
Yeah. Maybe Warren Buffett is the one that he flipped to gold, so maybe he'll flip to Bitcoin. But I'd love for you to explain the basically 5 different product types that I see. So obviously people are familiar with signing up to an exchange and buying some Bitcoin. So maybe start with like why some people can't do that or just don't want to. They want to avoid that. And then I think people understand like the concept of futures that just track the price, Bitcoin futures, and the Bitcoin ETF that we don't have yet that would hopefully hold some real Bitcoin. But I think it's those things in the middle that confuse people. So how does the Grayscale fund work? How does NYDIG work? And why is this latest announcement sort of so important?
Yeah, so a couple of things I want to say. Everything that I should have said this before, but not investment advice, what I'm saying. The second thing is, it's funny, I actually spoke to NYDIG this morning, so I want to be careful what I say. I know the folks at Grayscale, Michael Saunders and all, Saunders Shine and the folks over there are friends and good people. So I'm not here to slander anybody or say anything that would be demeaning to them. Again, I think everyone has their place. People feel how they feel about GBTC. People feel how they feel about funds. I've gone on record saying I think a Bitcoin ETF is stupid. We're going to get one anyway because it'll make a lot of money, but it's dumb. You're going to take this beautiful, elegant, decentralized asset, take it back to the 20th century, put it in this wrapper, stop it from trading 24/7, and completely put handcuffs on it. I don't understand that. Let's go buy a Ferrari and let's put training wheels on it for no reason. It doesn't make any sense. But we're going to get one, right? And it's coming. Everyone should brace for that. But I will have an epic rant on Twitter live when we get one. I'm going to rant. And I've been letting people know that for years. I just think it's abhorrent. But anyway, so that is one aspect, right? So from going to open an account and buying Bitcoin directly at a Coinbase or Cash App or Binance or whatever, right? I think folks get that. You get direct exposure. You get a wallet that sits in your wallet. What you're seeing from GBTC, and again, I'm not going to you have your closed-end funds, which that is, and you have, open-end funds, the open-end structure, which is an ETF, and you have other funds out there, plenty. Again, a lot of folks that I know and friends that are running them, Osprey funds. And let's start here. A couple of issues that needed to be solved. Folks wanted exposure, and GBTC filled that need. I want to buy it in my IRA account. I want to buy it in my, at my Schwab or Fidelity in my IRA. They solved that with the fund. So basically, creating shares, right? And putting the Bitcoin in there, creating shares for people to buy, right? So now there's a ticker, there's a QSIP, right? Number, right? GBTC, you could put that in, it pops up, you buy it, right? And I'm keeping this very high level, right? So, folks understand the difference, right? And you can buy that.
Can I buy that or accredited investors?
You can buy. Now that's where it gets a little wonky. You can buy it. An individual can buy it. We can both buy it. And then there is accredited investors that can actually buy it privately and get it at NAV, right? Which is, right, the price that they're actually selling it for, no premium, which a lot of folks were
So accredited investors can
right?
buy or get Grayscale to mint and create new shares. We can buy the publicly traded stock version
Exactly.
that's been
Exactly.
trading at a big premium over net asset value that Tyrone just
Value.
said. Yeah.
Yep. Yeah, and again, when you get into all that, you start to use all this language where people get confused. But this is the thing about it: we're so early, and these things need to be decoupled where folks really don't understand the difference. So yes, you could go right in and buy. Again, it's at a discount now. You
Yeah.
could buy it at a discount now because the demand is gone, and all that really is right is when you see the premium, there's a demand, right? A greater demand, right? Supply and demand, right? Demand for the shares. When it's at a discount, right? Not so much, right? And a lot has changed with these announcements. So you've seen it go to NAV and it drop below. Now it's trading at a discount.
Just quickly, did you see that FTX added the Grayscale index? And I think that was when a lot of people started to arbitrage that. And I think that played a part as well. But
yeah, absolutely. Yep. And again, I think there's been arbitrage with GBTC the whole time. But yes, people started really to pay attention to what was going on with it. So as far as a vehicle to get access, I want to keep this very high level because I think this is what's important here. Yeah. It gives folks access, the ability to buy it in an IRA. And that's what a lot of people want because there's a lot of retirement money, especially here in the US. People have a majority of their money in their retirement accounts. If I go to Coinbase doesn't allow you to buy in your IRA, right? So that's where the taxable accounts versus non-taxable accounts where I can just buy in that account and I can't touch it until in the US here is 59 and a half.
Yeah.
Right. So it's retirement money. So a lot of people wanted to do that. GBTC filled that need as a fund structure. NYDIG and others, again, what they're doing with Morgan Stanley is a fund. They have a Bitcoin fund that they announced yesterday that they're dropping the fee, right, to 30 basis points, right? And basically, you know, when you look at that, again, the demand and the competition and everything else, lowering the cost of their fund, right? And, you know, 30 basis points, again, for those out there, 1/3%, right? Of the cost of the fund to be able to get access to their fund. So basically, again, Bitcoin inside of a fund structure that trades, that you can put in a code and it makes it easier to access. I want to make this very important here. It's easier to access that way. I don't have to worry about private keys. I don't have to worry about public keys. I don't have to worry about storage. That fund structure takes that away. As does an exchange traded fund, an ETF, same thing. Put it inside this wrapper. Now I don't have to worry about any of that stuff, which is why financial advisors want an ETF so bad. No public key, no private key, no custody, no cold, no hot, no mempools, no nodes, no SHA-256, none of that. I just buy it, put in a ticker, hit send, right? Or buy, done. In the account, it's over with. I don't have to worry about any of that. That's the issue here. It's ease of use, ease of access, and also taking away a lot of the clunkiness that you and I know and the tech burden of, you know, having to input, right, a QR code or a seed phrase or whatever. Advisors don't want to deal with that. The average person doesn't want to deal with that. So kudos to Grayscale for seeing that need and filling it. All right, well, let's just give them a ticker to put in. GBTC buy. Over. I don't have to worry about anything else.
So,
right?
So are they the same asset class, or what are the difference between those three funds that we've just described?
Great question. So yes, this is where it gets interesting. In the US, the IRS considers Bitcoin property.
Yeah.
The SEC says the Securities and Exchange Commission says it's not a security.
Yeah.
The CFTC says, right, the Commodities Exchange,
Futures.
right, Commission says it's a commodity.
Yeah.
Right? Three different things, right? Regulated differently, so on and so forth, right? Again, whole separate conversation. High level here. What putting it in a fund does, so now you have publicly traded versus private, right? So when it's publicly traded, right, you have what you call, again, a ticker. I can put that in and it pops up. That's what GBTC is. It's publicly traded. Bitwise has theirs. BITW, right? Same thing. Trades publicly. People could put a ticker in and buy it.
Yeah.
Public. They're also private. Fidelity has one. A few folks have one. But again, you have to be a qualified purchaser in some cases, right? An accredited investor to get access to those, right? The reason, again, so in the private markets, it's folks that are paying up, that are higher net worth to be able to get exposure, right? So those are the difference. Now, what's interesting is there have been conversations that I've had with advisors and folks when the SEC comes in and goes, let's take a look at GBTC. They're kind of looking at it like a security, but it holds a non-security. So you put a non-security in a wrapper that would kind of make the SEC look at it as a security, not regulating it as a security. But if you would have left it a non-security that they said, you wouldn't have had to deal with this.
Okay.
So again, you sacrifice one for the other, right? 6 to 1, half a dozen of the other. So it's like, all right, I really want access. So I got to put it in something. I'm going to take a non-security, put it in type of something that could be a security. So now it almost is like a stock. And that's almost how they're looking at it, right? Yeah. Ticker, like almost like a stock, right? Almost. So that's why you're seeing so much hype about it and conversation about it amongst the wealth management community, because as an advisor, do we touch it or do we don't? Right? Like, do we leave it alone? But the everyday person can just put in a ticker and buy it. They don't have to worry about that. Oh, it's publicly traded. I could buy a BITW. I could buy GBTC. And then when they get an ETF, it'll be the same thing, publicly traded on US exchanges where they can put in a ticker and they could buy a Bitcoin ETF. That's going to happen, right? And maybe the ticker will be whatever, right? I don't know. They'll come up with some cool ticker name. Right. Satoshi, I don't know, whatever it is. And then again, you can go on your brokerage account in Fidelity or Schwab. You can go wherever, E-Trade. You could put that ticker in and you could buy that ETF. So it's about accessibility and making it easy for people to buy. You and I, who appreciate the crypto economy and don't want that bundling. I want to be able to move my Bitcoin wherever I want. I want to be able to borrow or lend or do whatever, right?
Yeah.
I want my Bitcoin. I want to hold it, right? Not your keys, not your coins. That, right? Not your keys, not your cheese, right? That type of thing. That's what we value. Everyone doesn't value that. So these funds, these ETFs, these other type of structures, right? There's also separately managed accounts in the US as well, which is basically the same way, right? A passive strategy into Bitcoin. A lot of folks offer those. So there are plenty of ways to get access based on your education, your income level, all these other things. To your point, though, again, GBTC publicly traded. NYDIG's funds are not, right? Okay. So, and if you want access to NYDIG's funds at Morgan Stanley, I believe I read you have to have $5 million at the bank, right? So you got to have $5 million at Morgan Stanley, right? And then you have to, I think for the client, I think they have to have at least 2 million at Morgan Stanley as well. So you see what I'm saying here is like,
yeah,
right?
They're going to get a lot of people move over, and that means everyone else wants to do it.
Yeah, everyone's going to go move the money to Morgan Stanley, right? So we can get access to these funds. So there's a lot of layers for folks to get access here. Again, that's the financialization of it. The beauty of it. And again, we'll get an ETF. We have funds now. We have SMAs. There's all types of ways to get access to, an exposure to Bitcoin. But a lot of it is, again, based on your needs and wants and desires as an individual. But as an advisor, those of us that are advisors, we have to be careful about what you use because you're going to be judged based on what you used and why.
Okay. Let's dig into why you don't like an ETF. So, I mean, I've always said that I think that the price of gold and silver is somewhat like suppressed or whatever because you can create that infinite paper supply. And some people don't want the real thing. That's fine. I understand that some people like ETFs because they can just get exposure to gold or silver price. But what I don't like is that $1 trillion can buy silver and they just issue more shares. In the real world, if someone tried to get $1 trillion of silver, supply and demand. So I just don't want that to happen to Bitcoin. We could hear this story that there's $10 trillion gone into Bitcoin in 2022, but it's all gone into this, let's say, an ETF that's just tracks the futures price or however they structure that ETF. And that, to me, creates that black hole where you can basically have unlimited supply. So it doesn't matter how much demand comes. That's my fear.
Yeah, Caitlin Long, I love her for this because she talks about rehypothecation, right? And just creating shares out of thin air. And one of the reasons, which is, I gave that reason for thinking a Bitcoin ETF was ridiculous years ago. But to counter your point, a lot of people say, well, no, a Bitcoin ETF will add to liquidity, right? Always will be at NAV and redemptions and making sure that they're just truing up. So it's always going to be, at NAV and it adds to liquidity in the market and so on and so forth. Okay, right. My co-founder at OnRamp is a biggie. He's part of the ETF mafia, I call him, right? He's reformed. He doesn't see the value of putting Bitcoin in the ETF either, but he gets it, right? Matt Hogan, love Matt Hogan, Nate Geraci, Eric Balchunas, all of the ETF mafia. I get it. And we'll get one, right? We just will. And I do think there is something to be said for it. There are people just, again, that we said are going to want exposure. My issue with it is, one, I just feel like we're trying to move financial services forward. Why are we going backwards, right? An asset that is very liquid in and of itself, that trades 24/7, that is beautiful and elegant and decentralized and borderless and all of these beautiful things that we love about Bitcoin. Why would you shackle that? I just feel like if you want a Bitcoin ETF, you truly don't see the beauty in Bitcoin. You just want the price to go up. And yes, maybe you do. But for me, when I look at Bitcoin, the reason why I love it is how it's going to help the underserved all over the world. Yeah. It doesn't help the underserved in the ETF. It helps the underserved, right? The underlying technology, the blockchain, right? The ability for people to use it as currency or as money, as savings technology. That's what makes it so awesome. And to close it off in an ETF just doesn't make sense to me. And then the last thing is, if all we care about is getting an ETF and making it available so Wall Street could go make all this money and put it in retirement accounts and charge a fee, and what are we doing? Ladies and gentlemen, like, I just don't, and who knows what it's going to cost? A Bitcoin ETF is not going to be cheap between the custody and all of the things, right? All the structure and who's doing it and, all those things. It's not going to be cheap. So I just don't, there are many reasons why I'm against it, but again, we're going to get it and I understand it. And maybe, the way of settling with it is just going, all right, that just means that the space has been validated. And if you want direct exposure, you can get it. But I do worry about shares being created out of thin air, right? And it's like, is this real Bitcoin or not? And also, shout to Nick Carter and a lot of other folks where, proof of keys, right? Like having that proof of keys. Do you have the keys? Show us, right? But you got a lot of these omnibus structures and so on and so forth. So there are a lot of things here, right? How the Bitcoin blockchain, again, that open source, auditable at all times. Like, let's stick to that. It's so beautiful. It's an amazing thing. And again, now look, we're seeing same thing with ETH, CME, the futures. It's coming, right? We'll get an ETH ETF too, right? But which will really be frustrating because look at DeFi and everything that's happening in DeFi, what's going on there. Again, something else that is going to be wonderful for the underserved. And I've stopped saying unbanked, by the way. But anyway, that's a whole separate podcast. So the underserved, not only here in the US, but all over the world, borrowing, lending, community banking, collateralization, interest, right? We're creating this new foundation of financial services and they're going to put it in an ETF. Yeah. Frustrating.
Yeah. Where does was Backed just another fund on that scale like we discussed? And again, they pivoted from being all about being fully backed to saying there's no demand for people to to claim or redeem, and we're just going again to a more paper market, and that's what I really hate.
Yeah, no, I haven't. Bakkt has been quiet to me. I had a conversation with them probably a year or so ago. I haven't really seen much news, but I imagine I know they have their access as well, but I haven't really heard much. I don't know what's going on there. But
That was private and high net worth only, though, wasn't
private,
it?
high net worth. Yeah, a lot of them are.
Okay.
Right. There's so many out there. We just put out a report on OnRamp on the fund fees, right, and all the different fees and funds out there. And I think the average fee was like 2%.
I wasn't joking when I said 1% at the start, talking about that 5 trillion figure.
Yes, 2%. 2% is the average fee.
So you mentioned Ethereum. Have you seen Ethereum become like recognized as a blue chip? Like those two have just got such a big lead over every other asset.
Yeah, I wouldn't say a blue chip, but the interest is, and again, Raoul Paul gets beat up for this, right? By talking about it as the technology and the upside as opposed to Bitcoin and things like that. As far as conversations that I'm having with, again, chief investment officers or RAs, just advisors, it's been more about what they've been seeing on Ethereum blockchain, right? With NFTs and, how do I get this yield, as opposed to getting caught, hey, how do I get into ETH?
Okay.
Right? Like, so it's interesting, but again, that'll evolve and it'll happen. I will say this, the advisors that I know, which are very few, that are in the know, see the value in ETH like myself, right? And see the value in the Ethereum blockchain like myself, right? So there are small conversations, but on the investment management, big picture scale, it's not in the conversation yet at all.
How attractive or important at the moment in this, low rate environment, or yields are starting to rise a little bit, but if you say to someone, and you can stake your ETH and get 7 to 10%, or if you've got some stable coins, you can get 10%, like, is that blowing people's mind, or is that going to quickly erode down to 2-3% once you get the big money come in and sort of, chew it up?
Great question. It's a lot of demand for it. The cash management opportunity is $1 trillion business when you look at it, right? Like even in the asset management space in the US, it's $1 trillion opportunity if you look at it, right? I think 20% of all client cash across the space is in cash or some type of cash equivalent. I was listening to Dan Tapiero yesterday. I think he was saying there's 190 trillion worldwide in cash equivalents, including like,
short-term bonds,
bonds and things like that. Yeah, it's massive. And people are looking at this environment and going, okay, well, let's take a look at BlockFi or Celsius. What is this? How are you getting 25%? Now, the first thing any prudent, smart CFA, CFP, whatever, counterparty risk. What is going on here, right?
Yeah.
How are you getting this? Right? Okay, well, 5%. Okay, that's a little safer. But so here's the thing. It's risky now for those folks because the counterparty risk, the smart contract risk, all of these different things. To your point, when the money comes flooding in, yes, that's going to come down. And maybe Anchorage now, who is the first true crypto bank, qualified custodian here in the US, right? They got the bank charter, says, all right, we can get you guys a safe 2%, 3%, 4% on your cash. That's massive, right? So again, if you forget Bitcoin, and Bitcoin maxis, I love you. I'm a Bitcoin maxi too. Forget all of that. Just cash management in our space, cash management. I think advisors for their client, I think it's like 0.04% that they're able to get for their clients. And then I think there's some options where you can get 0.5% or 0.75%. 5%, 4% is out there. We've had conversations with large family offices that manage money for some of the wealthiest people. And they're like, wait a minute, you guys are getting 5%? Get me 2.5 and I'll split the other 2.5 with you. Like, right? We'll help you fund OnRamp that way. So people looking at the environment and go, all right, well, how do we get some meaningful yield here? that's another conversation that I think people are starting to have. That's going to heat up, and I think you're starting to see it with the explosion of the stablecoin space, or crypto dollars, which is a better name.
Do you want to give us the quick version of what on-ramp is and how it ties into all the stuff we've discussed? Give us the shill.
Absolutely. So I'm the CEO and co-founder of OnRamp Invest, which is looking to give financial advisors the tools and resources that they need to manage digital assets for their clients the same way they would Apple or an ETF, right inside their workflow, and allow them to model, to plan, to bill, read-only view of held-away client assets. We're going to give them education, research, real-time pricing, data, all within their existing workflow. So that's basically what OnRamp is. So think of it as almost like the Stripe of crypto, right? Everyone else is building the hotels. We're the interstate connecting it all.
Okay. We're going to have to integrate that into a collective shift.
Got to do it. When you're ready, we're ready. Let's do it.
Get all those Aussie fund managers educated.
Yeah, man.
What else was I going to say? What we're seeing as well in terms of the altcoin space, you remember when we had that interview, there was the maximalists. They always sort of have their time in the sun, I guess, don't they? And they look like the smartest guys on the planet when alts are all bleeding and down 90%. And one of the things I was saying, and I don't know if you're a believer, I think you were a believer in Ethereum even back then, we're talking about smart money is going to flow into these large cap coins. Grayscale already had that fund, and now we've seen, Bitwise 10 you mentioned. Grayscale have just added things like Decentraland, Sushi. Like, it's amazing to see
Cardano,
things like that.
Coinbase now,
get funded. So is that all part of the, just part of the plan? People want a little bit of, that uncorrelation even within the crypto space, or is this maybe pushing the boundary a little bit too far with people just wanting to make more money on fees, adding as many coins as they can?
Well, it's funny. Again, let's break this out. There are advisors, again, my crypto hippies, as I call them, right? You're a crypto hippie. We're all crypto hippies. We love crypto.
Yeah.
Crypto hippies, the crypto hippie advisors are all over the place. Filecoin, Ether, Bitcoin, Dogecoin, they're buying everything, right? I've had some conversations about Decred and Polkadot and all types of stuff. I've had conversations about it all. Find it all fascinating. Kind of all boils down at some point to Bitcoin and Ether when it's all said and done for the advisory space right now. Then you have a subset of folks that when they first come to that are, again, certified financial planners here in the US or advisors in general, they go, well, it doesn't make sense to bet on one. Let's diversify. Give me 10, right? And then this way I'm indexed and I get them all, right? Yeah. And you're like, no, because it's crap in that 10, right? But you're going to come to crypto based on your lens, which is why we can't beat people up when they don't get it when we want them to get it. I didn't get it right away, right? And a cryptographer is going to look at it different than an advisor. An engineer is going to look at it differently than a data scientist or a doctor, right? Or, everyone is going to come to crypto and Bitcoin or whatever through their own lens and get an understanding that way. So we got to give people space to come to it when they, how they will and why they will. So advisors right away go, all right, well, give me 10 of them. Just make it easy for me. Then you have another subset that goes, well, and I did a podcast on this. Is it kind of like gold? Now, digital gold makes sense for advisors. Do I think Bitcoin is digital gold? I don't. I get the narrative, but for advisors, I realize that narrative makes sense because you can't go to a client and go, let's rotate out of this internet money in your portfolio and replace it with this internet money. But when you say digital gold, you go, oh, okay, makes some sense. And then you say that to the client and the client goes, oh, okay. So in that podcast, I was saying the digital gold narrative makes sense for people that are managers of money, for people who own portfolios or whatever, because as I said before, I can come to it that way. Oh, digital gold. Okay. All right. It starts the conversation. Whether it is or not, doesn't matter. Doesn't matter what I think. Doesn't matter what you think. Just matters the conversation. So you got that subset. And then I think you have people that just say, I'm going to trade them.
Yeah.
I don't care about the technology. I don't care if Dogecoin started as a joke. I'm going to trade this bad boy, right? I do technical analysis or whatever. I'm going to ride it. I'm going to make some money. And here's what I realized as a financial advisor, which financial advisors will start to understand. When I was working with young clients that owned a ridiculous crypto portfolio, I said, why do you own all of these alts? And they were like, to accumulate more Bitcoin.
Yeah.
And I said, I get it.
Yeah.
Right. Like, so, there's that part of it. So there's all these different parts of why people look at it differently. So, but as far as advisors go, the first thing is, okay, well, give me 10, give me 20, let me diversify. Then you educate them a little more, and they go, okay, well, there's Bitcoin and Ether. And then you educate them a little more, and then they either go one way or the other. And then, so there's levels to it based on where people are. But I think for this conversation of those that I talk to on an everyday basis is Bitcoin and Ether, and then that diversification, right, of holding a mix is where they're there.
Do you show people, I mean, compared to, let's say, the .com bubble?
You got to bear with me. I got to plug in my laptop. I think it's about to die. So we could edit this part out, or people could watch me hustle to plug my laptop in.
You go for it. Give us the close-up. Do you think that this is just a little bit more real? We hear about the .com bubble, and then we saw the 2017 ICO bust. But then this time around, you can say, go and lend some coins and click this button and use MetaMask and do it. Or go into Decentraland and check it out. Is it a little bit more real, and do people like actually just seeing these products, interacting with them, rather than just being entirely, just white papers and ideas? We're actually starting to see some real products. We're starting to see even like cash flows and valuations on DeFi coins.
Yeah, absolutely. I say this all the time. Dharma, incredible. MetaMask, I love. Like when you see all of these products that are out there, and again, for me, forced to look at legacy tools, you're like, oh, it's terrible. And I would have clients tell me that all the time. They're like, Tyrone, you got me using crap. And look at this elegant experience I'm having over here. I think there are folks that are nailing it in the DeFi space, right? Uniswap. We can go on and on, right? We can name, there's so many. But I think people are getting used to just the, hands-on and touching it and using it. And there's only so much people are going to read anyway, right? They want to experience, and which is why I say crypto is yet to have its iPhone moment. It hasn't happened yet because you haven't got the designers and the people that really want to create a beautiful experience from first touch point to last touch point and make it that way. When we get that Apple, Tesla, I
think like NBA Top Shots has almost scratched that surface a little bit.
It's getting there.
Yeah.
Yep, we're getting there, and that's very niche.
Yeah.
But when we get it where people are just interacting with the crypto space and they go, man, is this fast? Is this beautiful? Is this cheap? And it's like, oh, right. And now it's just everywhere. It's going to be this thing where you go, woo, okay. Now people not even know they're using blockchain, but it's just this beautiful experience. So we're missing the iPhone moment, right? Crypto needs its Steve Jobs. It's not Michael Saylor. No. I love Michael Saylor. He's not our Steve Jobs. It's not Elon Musk. It's not. Crypto needs its Steve Jobs. It's going to make it this beautiful thing that you didn't know that you need. And then it's just going to cross over and people will go, man,
yeah,
I didn't know I needed a phone with a screen.
Something just as simple as a beautifully designed app that you download on your phone that everyone can do. It comes with $5 and Lightning, and you can start sending your friends that have your phone number like over Lightning, like just something like that. It's very easy for something to start going viral, and next day everyone's downloaded it and talking about their friends, referring their friends. So it's going to happen. It's going to happen. And scaling is maybe that tipping point if Ethereum can really pull off some of these scaling things that it needs. But any thoughts on that?
No, I mean, again, I think we just, every time I have these conversations, we're so early, right? We're just so early. And I think with so much that has to happen in the space still, again, with scaling, all of the blockchains and all of the infrastructure, again, that still needs to be built. I just feel like the one thing that we can't account for is just people, one, us being overly excited because we're here, we get it, we understand it. And then the other folks being patient, right? While things are happening and things get scaled up and we start to see, again, right? EIP 1559 on Ethereum, right? And what that's going to mean for gas fees and, making it cheaper to use, Ethereum. And there's a lot that needs to happen, right? ETH 2.0. And are we going to get Taproot on Bitcoin and then wrapped Bitcoin? And there's a million things happening. We're still so early, right? So it's fascinating and exciting. But I think if folks are patient, right, and just let things grow and learn and continue to read and just get exposed. Again, you do a really good job of educating people. Again, following, on Twitter and everything that you're doing, you've done a really good job of educating people. And that's the one thing, and I'll end here. That is the one thing that is important. We need, as much as we focus on the next, layer of technology or the next line of code or the next Bitcoin mining facility, education. We need to scale education, right? We need to scale that. If we scale that, then there's more people that'll come in. And then again, a rising tide will lift all boats, my man.
Yeah, that's literally why we're building that platform out, because there's still not one place where you can send particularly professionals or baby boomers. I completely agree. And then you go to Twitter, you say, well, who are the people that you should be following? And a lot, there's maximalists, there's people that are too tech heavy. Everyone's got their own political views and religions about these coins. A lot of the best OGs have taken a step back, and you wouldn't even know. Like, new people would not even know who some of the OG loudest voices were a few years ago. So a lot of that has just got to just change and mature, and those people will become irrelevant in future as well. But wrapping it all up, mate, that's been brilliant. Any final thoughts for people at home?
No, I think, again, I would just encourage people to educate before you allocate, right? Just learn, read, ask questions. I actually always have it handy. This book is incredible, Crypto Assets by Chris Berninski. Incredible read, especially if you are an asset manager. Again, it is a little dated, but it just walks you through the beginning of, with Bitcoin, and then how essentially everything that has come after it has been a derivative of it. And Chris Berninski is a great follow on Twitter. Jack Tater, the other gentleman who wrote it. So just encourage people to, again, follow you, read your work, and just be patient with themselves and be patient with the space. There's a lot happening here, and it's still very early, but it's really exciting times. That's the first thing. And the second thing is, I owe you a tremendous amount of gratitude, man. Incredibly grateful for you giving me a voice, and some credibility and lending your platform to me. It means a lot, and it means a lot to you to reach out and have me back on. I know you have some very fervent, exciting fans, and I appreciate you, making room for me. It really means a lot. I appreciate you.
No worries, mate. Your mum would tell you off if you didn't thank me. So I remember you saying that last time.
You know it. Yeah, absolutely. She'll beat me up. Had to do it.
And guys, honestly, go back and if you rewatch that video we did last time, the interview, we spoke about portfolio structure and heaps of things that we didn't even touch on today. So I'll link that down below. But give Tyrone a follow on Twitter. I'll put him and OnRamp down below as well. Mate, it's been awesome to catch up.
Absolutely. All the best. And shout out to my Sharesies family too. I did Sharesies, the startup. I did a talk for them. I think they're based in New Zealand. So shout out to some Sharesies folks if they're on here. Yeah, check them out.
What's Sharesies? Haven't heard of it.
Sharesies is an app where you can go on and you can buy stock in shares and stuff. Really cool. I did a talk for them. It was like 9:00 my time, and it was like their lunchtime. And I ended up being their number one viewed lunchtime talk or whatever. And they sent me a bunch of swag and stuff. And they had just launched here in the US, so they wanted to bring me on. So if there's anybody here repping from Sharesies, what's up?
There's plenty of New Zealand folk across the ditch, but
there's some beef. Some beef. Is there some beef there between?
Well, I think only because they keep opening and closing the border with. But
okay,
awesome. There's a little extra segment for those of you that stayed to the end. But take care,
absolutely.
mate. We'll definitely
I appreciate
have to do it
you, man. Be well. Talk soon.
Take care.